There's so much talk about interest rates for obvious good reason. I mean, we've been talking about it for months and months and months and months and months, and everything has been impacted by it, right? But the bank is working hard at getting it under control, and I can't really imagine it being a small feat. Whether you agree with their approach or not, one thing for certain is that it is unfortunately our reality. And in my opinion, although the last couple of years hasn't exactly been the easiest, it could certainly be much worse when it comes to the scope of the real estate market in the GTA. Now, I shared this graph last time and it showed the direct correlation between how prices behaved each time the Bank of Canada, which impacts variable rates, either raised or has held rates. And you can see that with the rise in rate, which represents these blue dots, as they fluctuate, it affects the red dots, which are the home values. But what's interesting is that although variable rates are high, home values aren't continuing to drop. They sort of have found their balance and have been moving sideways instead of continuously going down. So have we found our floor here? Possibly. And you may be a bit surprised because everyone was expecting this to be an absolute disaster, but there's so much more that goes into the market than just interest rates. That's actually a good topic for another video, and let me know in the comments below if you'd find value in that. So when I'm speaking with a lot of people, a common theme that I hear is, I'm just waiting for rates to come down. And so it got me thinking, what does it look like then versus now, and where might there be some opportunity? Now in this video, we're going to be breaking down what it costs for a home when rates were really low and prices were high versus now when rates are higher and prices have come down. But before I jump into this, I just want to preface this video with saying that not everyone should or can make a move right now. But if you are on the fence and want more information or a perspective, then this video is for you. And also, this is all very high level. To get a more in-depth analysis, if this market is the market for you, then I would encourage to schedule a call using the link in the description below to schedule a time that is convenient for you. And that way we can kind of break it all down where you are now and where you're wanting to go, and to see if it actually all makes sense. So let's take Durham region for example, because they have had one of the largest corrections in the GTA. At the peak of the market in March of 2022, the average home price in Durham region was $1.194 million versus now the average price of a home in March of 2024 is $944,000. In 2022, with a down payment of $20,000, you would need $238,000 versus now you need $188,000. So that's already almost a savings of $50,000 that you don't need to have cash up front. Put that $50K in your pocket. So in 2022, at 2.5% interest rate and a 25-year amortization, your monthly mortgage cost would have been $4,279. And today, if you were to take a 5-year fixed at 4.84%, your monthly mortgage would be $4,326. And I know I spoke about this in previous videos, but just as a reminder, fixed rates have come down and are less than where variable rates are at right now. So whether you go with a variable or a fixed mortgage is really going to be dependent on you, because there's so much pros and cons to each of those things, and it all really depends on your goals. But that's a $47 a month difference. Now again, keep in mind that this isn't how everyone's numbers will look, and they're going to vary obviously on how much that you have to put down, income, debt ratios, and credit scores, etc. But if you are on the fence of potentially making a move and you have some equity in your home, and what's holding you back is the fact that what you're hearing on the media is a little nerve-wracking, because it is, and they're there to scare you, and they're there for clickbait, and they're there to make money. But I would encourage you to speak to a mortgage broker and get a full breakdown of what the numbers would look like for you. You actually may be a little bit surprised. Now, these numbers can further be reduced using a 30-year amortization, but I'd speak to your mortgage broker about what that would look like, because again, with longer amortization, it means more interest cost and you build equity slower. It really all depends on your situation and what your goals are, but be sure to ask all the questions. Now, besides the savings on down payment, the closing costs, and having a smaller mortgage debt amount, some other benefits of buying a home now versus before is that you actually have the ability to negotiate. If you were in the market a couple years ago, then you know how insane offer dates and bidding wars can be. And I'm sure that you've heard stories of people purchasing a home for these obscene prices and having to battle 20, 30, 40 offers on a home. It undoubtedly was a very difficult and stressful time. So not only do you have reduced competition, but now you can actually put conditions in your offer, like a home inspection. Imagine that. You can actually take your time to go through the property, to go through through the home and to look for any deficiencies. And further to that, depending on the deficiencies, some sellers are actually even willing to work with you to fix them before you move in. Now, in some instances, you can negotiate on things like obviously price and get it for less than what it is listed for. Also, if you don't have that whole 20%, because there's many more houses now to choose from, including detached homes under that $1 million mark where you can actually put down less than 20%. Now, one thing I do want to point out, and I'm sure that you've heard this before, because I know that everyone is always sort of trying to time their lives and the market, just citing this graph quickly again, because we're so sensitive to rates. What do you think is going to happen to home prices when rates drop? Because from this graph, it illustrates to me that when rates go down, prices go up. And that's not to scare you into buying a house next week, but definitely something to consider. And keep in mind, if you're someone who is on the cusp of being either priced out of the home you want, whether you know now you can get a townhouse, but if prices went up 20,000, 30,000, 40,000, what would that mean now? Would it mean that you're looking for a condo instead? Or worse, maybe you're priced out completely out of the market because you're just right there. Basically, guys, the message that I'm trying to get across here is that you don't need to make a decision today, but if you're planning a move in the next 12 months, and that's something on your radar, then start getting the information that you need today. Me and my team are happy to have a conversation and steer you down the right path, even if you're many months from either buying or selling your home. Ciao for now, and we'll catch you on the next one.